Friday. And it is Tuesday, Cinco de Mayo. It's May 5th. I didn't even know what the hell Cinco de Mayo was until I moved to California. Then I actually understood what it was. That it wasn't just May 5th, but hey, what are you going to do? I think story of the morning, there's always a story of the morning, is that oil is remaining sticky. It's remaining sticky, still kind of stuck around this 104, 105 area here. And with that being and remaining sticky, it's having a little impact, not much, but a little impact on the equities where they're not really exploding. Like the Dow had a really rough time yesterday. And then I went and looked at the heat map. I went and did a heat map and I looked and I was like, you know what? It didn't really look like anything specific or any one stock. It was definitely the group. It was definitely the whole group. Everything was down about 1%. And with that being the case, it kind of dragged the whole entire index down. But, you know, on the other side of the coin, the NASDAQ continues to make all-time record highs, and we are getting scarily close to 28,000. 28,000 on the NASDAQ. 28,000. Absolutely insane move. As well, the ES continues to kind of follow along. And the Russell is a bit of a slug here. It's not really following through as hard. Although it has been making highs, they haven't been huge breaks of the highs. We've been getting like slightly past the highs and then getting a pretty, decent sell-off on the Russell. And so that really hasn't followed, and neither have either of the indexes. I mean, they are been going up and they have been making highs, but not to the extent that the NASDAQ is making new highs. And it's making it a very difficult trade. Now, I know you're going to say, oh, well, it's just easy, right? You just short the highs. Yeah, I mean, go ahead. And I've been watching, and I kind of watch a number of people during the day who do live streams, and I find it very interesting in the last couple of weeks, but more so the last week and a half. Many of these folks are getting absolutely cut to pieces, and I can sense the frustration because they're like, and it just makes me understand that why I don't do that shit. Number one, because I'm not into doing that in the first place. And number two, it just, kind of exposes them for not being that calm, comfortable trader that they portray themselves on TV, so to speak. It kind of exposes them to be just like the majority of everybody else. When shit don't go your way, you kind of lash out, and it's been kind of interesting to watch, and I've actually changed my opinion of quite a few people that I've watched that appeared to be very calm, cool customers, and the last week or so, seeing them kind of unravel a bit, like online, and saying to myself, dude, what's your problem, man? Like, well, you took a loss, like, so what? And then you took a loss, and you took a loss again. You took a loss in like some fucking evaluation account or some flex bullshit funding, so-called funded account. It's not really a funded account, right? We know that. It's just an account that you can get, you qualify for payouts. It's still fake money. And I just say to myself, geez, what the fuck would you do if that was like your real account? Well, because I know I've actually been there where I've lost a couple $1,000s on trades in my real account, and I've never acted like that. Even in my worst of times, I may have gotten up and screamed for about 20 seconds, and then I'd be done. And I'd be like, all right, got me. I lost that one. Okay, so it's time for me to, but yeah, it's kind of crazy. So yeah, again, the price action is very, very choppy, and I'm going to continue to say that if you are trading these markets, make sure you keep it small. Trade the micros, 1-2 contracts. Don't be going 5 and 10 and 1-2s, onesie-twosies. Take your shots and take your ball and go home. And that's kind of really it. And no matter what the market is, whether it's equities or unless you're trading like soybeans, which had a great day yesterday. I'm sorry I didn't, again, knucklehead, not paying attention, but I was off doing other things. Missed a great trade. Soybeans was pretty heavy yesterday. Had a nice run. Was up about 14 cents. So, but anyway, unless you're trading something like that or like cattle or one of the grains, you're not getting that movement in the follow through. Even gold, there was a few short setups overnight in gold that you could have traded gold to the short side. I actually walked away. I seen the setup. I was like, you know what? It looks good here. And it probably did set up. And I just didn't like the price action. So I walked away, and I would have normally taken that trade on a regular market. I would have taken that trade all day long. And I decided not to because I'm not happy with the price action, and I'm not going to force myself to do something that I'm not comfortable with. And I think that's the difference between how I trade now and how I traded even 5 or even 10 years ago, is that now I don't give a flip. Because to me, if it's like, oh, I missed that, you know what? There's going to be there's a million. Always look right. And what I mean by that is when you miss something over to the left, don't keep looking at it and say, oh, I shoulda, coulda, woulda. Keep looking right. Because you know what? It'll eventually happen again, or something will happen again to where it'll set up over here and you'll get it. Because time is not an issue. The only one making time an issue with your trading is you. You and every other charlatan out there selling some fucking service, showing how much money they're making and making you feel like you're incompetent. And trust me, folks, if they were making that much fucking money, they wouldn't need to sell anything. And I'll say it here and I'll say it again. The best traders that you want to emulate and follow, they're not online. They're not online. They're not teaching nobody anything. They're off in their little corner, wherever it is, whether it's an office, whether it's on a yacht, whether it's on a beach. And they're off doing their thing and trading their system. And they're not interested in fucking telling you how to do it. Because you know what? If they tell you what they're doing, that's one more person that they have to trade against. And you might say, oh, in the sea of all this other shit and blah, blah, blah. You know what? It only takes a tiny, 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 and I mean a fraction of an edge over anyone else. And would you really want to share that with every fucking body? No, not at all. So, just remember that. And that all these people out there in La La Land are nothing but, they're just fucking charlatans, man. At the end of the day, there's some discount code or there's some referral something or there's something revenue generating on their end that's being created in their stream when they're trading. Even if they're showing you they're making all these profits, trust me, most of their money is not being made doing that. So anyway, that's kind of how it's been going. And then as far as gold is concerned, I'm going to stay away until this thing really recovers itself. Because again, you start zooming out and it does not look good. It definitely looks like there is some level of I don't know, call it liquidation, whatever you want to call it. There is definitely some semblance of a fracture in the bullish market in gold. All right, and so that's all I got to say about that. Now, as far as the Russell, which is the one that I'm going to be trading the most, it's been choppy here too. It's been a bit choppy here too, and I've been kind of sitting on my hands quite a lot. In fact, I don't even think I didn't do any trades yesterday at all. Nothing. Nada. And if I were going to be doing anything in here, you're going to need to, I'm going to go and lean on this area up here. We have an R1 28, 27. I would mark a little below that at the 28, 25s, kind of that range. And this whole space up here is going to be, I think, the area you're going to want to watch in the Russell today. And I also think there is some econ this morning as well at 8:30. At least that's what I'm being told. But up in this area here, you're going to want to look. There's a, again, we have yesterday's highs. We have an R1 pivot. We have an R2 pivot. We have all-time highs, right? So a lot going on up here that you need to be aware of. And again, if you're going to be looking for a setup up here, you're going to want to do it on a shorter time frame, right? You're going to want to zoom in and then wait for some confirmation level or some kind of reversal to get in up on these levels. And so that's where I'm going to be watching today for a possible trade. It could possibly be the trade of the day, meaning we kind of come up here, we take out highs, we take out yesterday's highs, we maybe get near or touch R2, and then we kind of get that pullback. Rather than chase this, right? Because, chasing this to the upside is, again, going to be a little bit more, I think, more dangerous than just trying to find an area where it's going to get some natural pullback. So that's kind of it on the Russell. And if you look on the 5-minute, the 5-minute looks a little bit clearer of where some of these levels are up in this area here. So that's what I'm going to be looking at on the Russell. And that's really what I'm going to stick to. I'm going to stay away from, because the NASDAQ has been just blowing people out up here, because even if you're buying the highs, what's been happening with the price action is it's been blowing out and making highs, and then rather than like break out, it's been like this chip crap where it like chips out and it just ticks maybe 10 ticks above the highs, and then it'll rip back and then rip back up again. Real crazy price action, but that is kind of how markets trade when they're at the highs. Right, because they're out to look for those people looking for that quick hit. They're going to try, and the market always tries to inflict the highest level of damage on the most amount of people. And they know, and look, they know, and the quants know that there are people out there looking to, scalp the highs here, and they're not stupid, right? They know, and so again, so just be aware of that, and I think that's going to be kind of the tail of the tape today. And then depending on what happens with, let's see what the econ is. Economic, I think there is, let's see, 830 PPI, so that's a pretty big one. And so it's PPI. So that is, so they're forecasting a 4.1%. So they're forecasting a pretty decent bump in PPI, which stands to reason, right? Because, likely that's going to be up because of oil and everything else, and because so goes oil, So goes everything else. So that is what is going on at 8:30, and most likely that is what the market is kind of waiting for right now. So other than that, that is about it. As I said, most of the and let's go look at some stocks. Most of the, and I have a couple of things written out here, but most of the bigger stocks like Apple and whatnot were down pretty heavy. But again, they've actually run pretty good. I always looking at this, looking at these on the 4 hour a little better. We don't need those. So that was kind of the range yesterday. We did get up to 287. And then we did get down to 278, and Apple was down pretty decent, and I see it's down a tad today. It's likely going to pay it's paying a dividend out as well on May 11th, so that will hit the stock a bit also. But number of those all big stocks, as I said, in the Dow kind of got hit relatively hard yesterday. But again, it wasn't like any one of them. It was the fact that it was pretty much all of them across the board. But then, that didn't stop the likes of like Micron, which is exploding again today. SanDisk, which I believe has a split. I believe SanDisk is going to split. I think they're going to split like 10 for 1 or some business. I don't know exactly, but I think they are going to split. Seagate. I mean, all these chip, basically memory and storage makers just kind of killing it beyond belief. And, and realistically, what do you do with these? I've been talking about it, like, unless you're just going to close your eyes and just go long, go for it. I can't trade that way. I can't trade or invest that way. Even the likes of Oracle, which has been an absolute piece of crap, continues to kind of roll higher here from these doldrum lows. Back when it was 130, it's now 184, closing in on $200. I mean, for a while there, this looked like this was just going to fall off the earth, and a really huge recovery. Now, their PR right now out in the public is not very good because of the way they fired everybody. But, in putting it in perspective, folks, I've worked in IT a long time, going on almost 40 years I've worked in IT, and I will tell you, it's always been that way. I mean, and the fact that everyone's like, it's always happened. You go back to the late 90s, and all these fucking companies did the same shit with how they fired and laid people off. It was like massive. And I know myself, I worked for Comcast. They brought us all, and they brought like 100 of us into a fucking room. And they didn't do it by email, but they just brought 100 of us in a fucking room at like 10:30 in the morning, and they had everybody there, HR and everybody, and they had the security guard make sure nobody fucking blew a gasket, and then you had the whoever they decided to be the butcher at the time to cut everybody, gave their speech, we really value everything you did. Well, no, you don't. Shut up. Just fucking give me my check. I sat there and all I was saying to myself, just give me my fucking check, give me my fucking severance, and just let me get the fuck out of here. I would have rather it be through an email, to be honest, after going through that. So anyway, I don't know. I didn't find it to be a big deal. I didn't. I mean, it looked bad. Like, yeah, I get it. It looked bad, but reality is, I mean, what are they going to do? They're going to bring all those fucking people in and, talk to them. You know what I mean? It's like, nah, they know why they're getting fucking let go. Like, because, they're looking to save money. That's it. That's it. I mean, it's no hard feelings. Happened to me, and I got a nice severance package away. I mean, I was sucked that I didn't have a job. But I got a nice severance package, so I was happy. They didn't send me off empty-handed. I had still kept my 401k money and all that other shit. So anyway, there's two sides to every story. And I'm not justifying what they did, but all I'm saying is that, it's not the first time and it won't be the last. And somebody else will do it and then they'll catch shit for it too. But anyway, they're recovering pretty well as well. Amazon still doing really well. I don't really like a lot of these. And I told you I'm kind of a little, I'm not going to say I'm bullish, but I'm on this Microsoft train a bit here. And I'm looking for Microsoft to make a move. And I think if there's a place to land in tech world, it may not be bad in Microsoft. I mean, because, look at risk reward here. I mean, this thing has just gotten absolutely punished. Literally, touched its lows and, it's actually come back up. It's got a long way to go back where it was. And so I'm looking at Microsoft as a good spot, place to be. And then what I'm doing in Microsoft is I'm already in something. Hang on a second here. I have to. All right. So anyway, that was my son wandering around the backyard. Well, he wasn't wandering like he was meandering, but anyway, I'm going to bring up my Tasty Trade. The shittiest platform on the planet. It isn't. It's not, but it's bad. It's bad. It's bad. And it's going to crash. I know it. It's going to crash my system. It's been crashing my system a lot. Tasty Trade. Piece of crap. Piece of crap. Piece of crap. Okay. All right. So here we are. What I've been doing in Microsoft, I've been actually getting beat up pretty bad. Lo and behold, I've been getting beat up pretty bad. You can see I'm down quite a bit in my positions, and I was kind of on this train. What I've been doing with Microsoft is I've been trying to, look, I'm just like everybody else too. I'm trying to hit a home run with it, and I was out buying calls. And you can see I've been out buying calls, and they're out of the money, and I'm just looking to knock the cover off the ball. I'm just looking for this thing to, bounce, rally back before the end of the year is up, and then hopefully have some of these positions kind of make themselves up. And I've been slowly building this position, and some of them, you can see, some of them suck, but some of them are pretty good. And I did this short. Where in the hell is it? Oh, right here. I'm in this put spread, which I bought right here live. I did the 410, 420 before earnings, and I took a bit of a hit on it. It wasn't looking too good. I actually bought it after earnings. It was an after earnings trade, and it got hit a little hard, but it's snapped back. And then since it snapped back, I actually took this. I had Maze, right? You can see it's a vertical roll, and I rolled this out to June. And I still like this trade because volatility in here is pretty good still. And I still like selling puts in Microsoft. And I may add a little bit to this position. So, being already in this, and let's get rid of these weeklies because I can't stand the weeklies. And being already in this position here, the 420, 410, I'd likely add to it, and I wouldn't go as far in the money, though, as this. Like, I wouldn't do a 425, although that may not be bad. Do a 425, 415, and then overall, I mean, the problem there is I don't like the probability of profit being 45%. Although it isn't really costing me much. It's only costing me basically, $400 or $500 to get 10 deltas of positive delta. So to me, that's a pretty good use of capital to get positive delta. I just don't like that fact that, so what I'd likely do is I do a 415, 405. I like the fact that it's got a 54% probability of profit. It's right around the money today. It's up $2 pre-market, so I might not even do anything with it today. Right? I always like to do these things when the stock is down, so I likely wouldn't do it today. If it's up, I'd like to see it do it on a down day. But this is how I would build a position here in Microsoft going forward. Doing at or in the money, at or slightly out of the money. I would stay at the money, puts, and then sticking in June. And then if I was actually looking to even build further, I would go out. I would not do July. Do not do July. I would do August. And the reason I would do August is because it's kind of like right before the next cycle. And you'll get a little bit better premium, and I would do the same thing depending on where it is. My next position in here, maybe next week or so, even the week after, but maybe even next week, I would actually go and look at maybe like a 420 or even a 410. It will really depend on where this price was. If it was at 415, I would do the slightly out of the money. I wouldn't do the in the money. And I would do like a 410, 400 out in August. I got to clear this. And then again, this is how I would build a position in Microsoft. And then kind of taking small little chips here and building this positive delta in here and really only looking for Microsoft overall. I'm not looking for this thing to come all the way back to $500 at this point. If this gets up to 450, which is right about in here, which it would fill this gap, it would be right around this high volume node here, about 450, 455, be gold. All those puts would be out of the money at that point. They would probably significantly, collapse in premium, and I would be able to, buy those back much cheaper, if not for basically nothing. And at that point, again, building this small little position in Microsoft here at these levels. Because even with the overall market kind of like being at highs and expecting a full, Microsoft's already gotten that. So I could even see the market getting beat up and not really seeing Microsoft get slammed anymore. Not that it would be immune to it. It would still probably be down. I just don't know if it's going to be down as much as some of these others. Like the Microns and the SanDisks and, all these ones that have just run out of the building, so to speak. So anyway, that's kind of my take on Microsoft. And it has nothing to do with their business. And it has nothing to do, because Microsoft fucking makes money. They make money. And how they report money and how they report their earnings and how they actually handle guidance and all that other shit is, that's all PR shit. Microsoft makes money. And I foresee that happening going forward, for time to come. So, I think you're in a good position there. I mean, and then just look back. I mean, it's been earnings machine, right? Green, 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 green pays a dividend. You know what I mean? You know, and so they have the revenue stream there, and they do have the earnings. And I know they're taking a little bit of a hit on the AI thing, and you know they basically burned some capex on stuff that didn't really pan out. But you know, hey, whatever. Anyway, that's kind of my take on Microsoft. I think it's actually, unfortunately, and I even hate to say this, but I think it's probably the best big tech play out there right now, only because of from a price perspective and a volatility perspective, and where it is. So that's kind of my take on things here with Microsoft. Now, I also felt that way about Palo Alto, and then yesterday, this thing decided to, take off yesterday. It was up almost 2%. And then all of software, right, making me look like a bozo. It's a bozo to clown. What do you mean bozo? Who's this bozo? I guess I got to watch Seinfeld. But anyway, but all of software kind of having a really big snapback. With the likes of like CrowdStrike and CRM. Again, I'm going to reiterate, I still like these short. May not necessarily like them short here, but I think these kind of blow their wad relatively soon. Anyway, my opinion. So anyway, that's kind of where we're at there, and I'm still going to be looking for Palo Alto, looking for something to do in here. And I'm more importantly going to be looking for something to do probably around earnings, which is going to be in May 11th, I think it is. Oh, June. So I got a long way to go. But I'm still going to be looking to do something in here on a down day, and I just haven't found one. So I'm going to be waiting, and I might just get waited out on it if that's the case. But that's kind of where we're at there as far as stocks. And then this NBIS, my God, this thing is an absolute monster. It's a monster. Earnings coming out May 26th, Wednesday the 13th. Sorry, Wednesday the 13th. So next week sometime. Is that next week? Yeah, that's next week. So I'll be watching that one, but this one just absolutely they've been killing it, man. Up 14%. I don't know what the news was. I mean, it's always something exciting with these guys. But, this one is kind of in the boat of with the SanDisks and everything else right now with the way this is moving. It's just absolutely insane movement in this. And pretty much all these data center focused ones have actually recovered pretty well. Iron really hasn't really been come back to the level that NBIS has, but NBIS, I mean, and I'm taking it on the chin a bit in there because I'm actually I actually shorted some calls. I did an iron condor in there. Where is NBIS? And I'm short some puts, but I'm also short some. I'm down 40. I thought I was down more than that. Yeah, I'm short some puts that I rolled from an iron condor that are actually recovering. So I'm down there, but the iron condor has actually done really. It's done really well, but it's done okay. It's actually up. And the reason I think it's up is because I went so wide out in the puts. I'm out in the 220s, but those are even looking kind of in jeopardy. I mean, what I could do today, after such a big move like that, I could move these calls. I could roll these up to, let's say, I could probably roll these up. We're at 170. I could probably roll those up to like I don't know, man. I'm at 130. So, yeah, I don't know if it's time. I don't know if I'd roll them to 150 yet. I would probably wait. It's down a little bit. I think they're in a good spot down here in this 130 area. And then I'm way up here in 210 land. Up here, so I think I'm in a good spot. where if we get a pullback, if we get a little dumpage in here, that iron condor should come in pretty nicely. But I would say this, that I do think, again, that is the trade in here. If I was looking to do something in here, I would gladly do another one. I would gladly do another one here in NBIS. A lot of liquidity out here, especially in June. A one standard deviation. Let's look at a one standard deviation. Now, they're 10 wide out there, so you got to remember that. So you're going to be using a little more capital. But I would even go 125, 115. And you can bring in 327. You're only going to use 673 bucks. You got a 64% pop, and you're basically delta neutral. That's a pretty nice trade in NBIS here. Again, playing that range game, so to speak, right? Playing that range game where you are pretty much in that space there, right? Where, again, we're not looking to just get long this thing, because, again, what happens with these stocks, and nobody ever talks about it, is that when they get hit, they get fucking crushed. But the thing is you can't time it. That's it. You can't time it. But you look back on this thing, and when this does go, they crush it. They crush these, and it's kind of due. I've been saying that with some of the other ones, like the Microns and all the other ones. But again, it's kind of due. At some point it has to pay the piper. I guess, I don't know. It doesn't seem to be true with anything else right now, with any of these stocks. But anyway, I just still wouldn't feel comfortable just being on one side out of the gate. I still think that's a good play. And again, when you're looking at an IV rank of 88.6, that is like the wheelhouse. And you can see this is historically the volatility in here, and it is even that is at highs, and so that's a good place to be if you're looking to sell stuff, especially it's on. I wouldn't just sell calls, and I wouldn't just sell puts because of how volatile this is, and I think that's why it's a good idea to stick with the condors, the iron condors, and more specifically with the wider iron condors, because you're getting a little bit more money, even though you're risking a little bit more. You're taking in a little bit more money. And you're kind of doing kind of a neutral trade, even though this thing continues to kind of bang out highs. You can see that it's worked out in both cases. I had an iron condor before. I flipped out of the calls. I rolled the puts forward, and it's working out. Now, I'm not making a ton of money, but that could easily be a $300 or $400 loss if I was on the wrong side. So anyway, that is kind of what's going on there with these stocks. And then you got this one too. This is another one that kind of banged it out yesterday. But overall, this is not one that the fact that this has had this kind of fall from grace and now is like basically not even recovered half of its once dominance, I guess, if we were going to say, is pretty scary. Pretty scary. And then there's CoreWeave, which I was completely wrong on. This didn't work. I sold the couple. I was in here. Look, not everything works. I was in here. I sold premium in here, and this did not work, and it blew out. My iron condors, I had two of them, and I took a loss on both of them. I don't think it was even $100. I think it was like $25 and like $40 on each. I took losses, and I was like, you know what? I'm just getting out. I'm not rolling puts. I was going to roll puts. I just was like, I just said, no, you know what? I'm not going to do that with that, because what I didn't like about rolling the puts in CoreWeave, I really didn't see this it wasn't really paying for me to roll the puts. Wasn't really getting enough money because the volatility was not where it should have been. Because when I originally sold those iron condors, volatility was in the 80s, and the fact that it was now in the 40s just didn't make it that attractive to roll the puts. I would just rather just get out of it than play that. Again, be careful playing that rolling game just because you're rolling, because you're down and, Tasty Trade told me to do it. They don't give a shit about whether you're making money or not. They want you to roll because they want that fucking commission on the other end. They want you to roll into another contract because it means that you're going to generate another $2 in commission. And if you don't think, and you say at the end of the day, they're like, no, that's not what, yeah, that's why. That's why. There's a profit motive there. So, be careful. There's reasons to roll. Again, in the case of NBIS, where the volatility was still high, and so it was worth rolling the puts. But here, volatility just wasn't paying me to roll and stay in the position. So, again, you're wrong and the trade didn't work. Sell it. Get out of it. It's not a big deal. It's not a big deal. Nobody's paying attention. And the IRS doesn't care if you take a loss either. They only care about it is if you take a gain. Because losses you can't get taxed on. So they don't give a shit about those either. So, don't worry about it. Losses are okay. And so that's really it. That's all I have. So I think where the action is going to be, folks, is I think the action is going to be in stocks and individual stocks. And I think it's going to be more so getting away from the overall market, where I think that's been the case probably the last 3 or 4 months as we've been in this big rally on the way up. And, the big rally and the big dips is that the price action in the global overall markets, specifically futures and zero DTE options and all that kind of shit, have been really active. And I think we're kind of rolling out of that phase. And I think we're going to get more into it being not going to say a stock pickers, but it's going to be more, trading stocks, individual equities. Because I think overall, when we look at the markets, it's tough. It's tough to trade markets when they're at highs. Just like it's tough to trade stocks when they're at highs. So what you need to do is kind of find stuff that's not at highs. Because even though the market is at highs and there's a number of stocks still making highs, there's a number of stocks that are still coming off their lows that have more potential to go up further than or down, right? It doesn't have to be one direction. Than the overall markets, and just trying to short. And so that's kind of where I'm at. That's all I got. We'll be waiting at 8:30 for these numbers. And that's about all I have to say about that. So trade them tight. I don't think there's any... I haven't really been looking, to be honest, as far as earnings and stuff. Because I haven't really seen anything worthwhile, to be honest. I have not seen much worthwhile to trade. Not many of these are stocks that I normally trade on earnings. And so I kind of did a pass. PayPal. You could probably look at PayPal. I'm not a fan of PayPal. I've gotten dunked in that one once too many to kind of be involved. I see AMD, but what am I going to do in AMD? Good volatility. I'd assume they probably come out after the bell, right? AMD is usually an after the bell. Let's take a look, AMD. I don't know. Again, I have a problem with trading a stock. Let's look at May. I have a problem trading a stock that's been running the way this has. But that volatility's got me a bit interested. Real good liquidity, though. Let's try a one standard deviation. Let's try the standard one. I don't think you're going to get any money for a one standard deviation, to be honest. I just don't think the premium is there. And if I'm going to go somewhere, I'm going to go out. I would probably go to the 390, 395. I would go out further. That's actually not that bad. If I was able to do this for $1.30, I'll probably do this. in May. That's not a bad trade. Even if they have the potential, like you're looking at a $36 move in May. We're outside of the one standard deviation. We're well outside the expected move on the upside. I mean, the risk here in here is definitely going to be to the upside, right? I mean, that is probably where you're going to get the most risk, at least seeing how all these stocks have traded. I would even go as far as I would even actually juice this a little bit, and I would actually do the 300. I would go inside the one standard deviation on the put side with the intention, hey, look, if they do disappoint and it does get clipped, and let's say it gets clipped $50, and then these go in the money, I wouldn't have a problem rolling this. I wouldn't have a problem rolling these puts out. And so I would even do that trade. And the nice thing about that is that's a decent premium. If you can do that for $1.45, folks, that's actually a pretty good trade. That's a pretty good trade in AMD. So the 300, 295, 390, 395, Iron, Condor. And I don't think I have any positions in AMD. Now that I think about it, I don't think I do. I don't think I do. No, ADM, I don't have any positions in it, so it's actually good. So I'm actually going to go and throw that because they likely have earnings tonight, I would assume, because they're usually an after the beller. After the beller. The beller. Yeah, they're usually an after the bell. It doesn't say that, but they are usually an after the bell. Let's go look real quick on what it says. Let's go to there. Let's go to Big Tech and let's go to AMD. Yeah, it just says after the close. Okay. See, they are an after the close. I don't know why it doesn't say that in there, but I like that trade. And depending on how it's going to do today, it's up about $8. So we could adjust this. We're going to wind up adjusting this. This is actually up. But I do like that one in AMD. And that's probably it as far as like what I would trade after the bell. I'd stay away from Pfizer's before the beller. They already probably announced already. PayPal again. I've gotten dicked too many times on that one. And then tomorrow again we'll take a look, but I don't really see anything. Uber maybe tomorrow. Uber might not be bad, but that's it. So AMD after the close we will trade that and look to do some kind of